It's firmly in focus because of the AI agent narrative, the focus on memory and interoperability infrastructure, the real activity around agent related launches, and the simple fact that any protocol positioning itself as foundational for autonomous on chain agents continues to draw attention in a market still heavily focused on AI themes. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on UB. I actually read them. Looking at ratings and signals, short-term scanners have turned more cautious after the rejection from recent highs, while longer-term and fundamental leaning views remain more constructive because of the AI memory and agent narrative. You will see a mix of hold and mild sell readings on pure momentum tools, balanced by the still visible relative ranking and on-chain interest. Funding and open interest in the derivatives market stay active given the volatility. The short-term outlook from pure technical sources is more defensive until price can reclaim and hold above the recent resistance cluster with conviction, while the broader narrative around AI agent infrastructure remains one of the stronger themes in the market. Here's the real debate. Is UB still undervalued or fairly valued after the run, or is the current level starting to look stretched? One side points to the AI memory layer concept, the focus on persistent agent memory and interoperability, the role of the token in fees and governance, the relatively early stage of the agent economy, and the idea that infrastructure for autonomous agents could re-rate if capital rotates back into AI narratives. They argue that if usage of the memory layer grows and the token remains central to the economy, the current market cap could still leave room. The other side says look at the valuation and the recent price action. After a strong advance, the token is no longer cheap on an absolute basis relative to many other mid-cap AI names. The fully diluted valuation is elevated, and any slowdown in attention or rotation away from AI themes could pressure the price. On the technical side, the bigger picture shows a clear multi-month uptrend that has more recently entered a consolidation or corrective phase. Price has made higher highs and higher lows over the larger time frame, but short-term action has produced lower highs and tested support after the latest push higher. Momentum indicators cooled from the more extended readings seen during the strongest parts of the run, and volume has remained elevated relative to many other mid-cap names. Moving averages on the higher time frames still lean constructive, while the shorter time frames look more mixed. Short term, it feels more like a digestion of gains than a full trend reversal. You can argue the larger structure remains intact as long as key support holds, but the immediate picture has become more range bound and reactive. What's going on with Unibase right now? The chart has pulled back from recent highs, some short-term sell signals have appeared, and yet a lot of people still argue this thing remains one of the more interesting stories at these levels. How do those two views line up? Let's talk about it. Unibase is a decentralized infrastructure project focused on providing a high-performance AI memory layer for autonomous agents. It aims to solve the problem of stateless AI by giving agents persistent, verifiable long-term memory and cross-platform interoperability so they can remember, collaborate, and evolve over time. UB is the native token used for protocol fees, governance, staking, and ecosystem incentives. It currently ranks around the low 200s by market cap, with a circulating supply of 2.5 billion out of a 10 billion maximum, and the price has been trading near the levels you're seeing after a strong run and subsequent consolidation. That's the tension. The technology story is real and the narrative remains relevant, but the market has already rewarded the story and is now more sensitive to any loss of momentum. Retail often gets caught on both sides here, either chasing the narrative too late or underestimating how quickly attention can shift even for projects with real positioning. Bull case versus bear case is relatively clear. Best case, the AI agent narrative strengthens, usage of the memory and interoperability layer grows, the token remains central to fees and incentives, and price manages to reclaim the higher levels of the recent range. In that scenario, the larger uptrend can resume. Worst case is a deeper consolidation consolidation or correction if attention rotates, competition intensifies, or broader market conditions turn risk off. In that scenario, the token could spend time grinding lower or sideways while the market reassesses the valuation. Risks are still meaningful, volatility remains high. A broader risk of move, a drop in AI related interest, or increased competition in the agent infrastructure space can hit the token. Downside is open if the current support zone breaks and the correction deepens. Even projects with strong narrative positioning can experience multi-week or multi-month drawdowns after large runs. Liquidity is solid relative to pure microcaps but still thinner than the very top names. So larger moves can still happen quickly. There's also the structural risk that comes with any early stage AI infrastructure play. The narrative has to translate into sustained agent usage, real memory demand, and relative outperformance, otherwise the token simply fades. Short term, the picture still looks more consolidative and reactive than strongly impulsive. You need to see stronger volume and a clean reclaim of recent resistance before the short term bias flips with real confidence. Longer term, it comes down to whether Unibase can convert its AI memory layer into sustained demand and relative outperformance for the UB token. That's the path that keeps the current levels looking constructive rather than extended. Nobody knows which way this resolves. The technology positioning is real, the AI agent narrative remains relevant, and the market has already given it a solid mid-cap ranking, but the chart is still digesting a strong run. So the real question is simple. Is this the kind of project that can keep expanding its role in autonomous agent infrastructure and push through the current consolidation, or are we watching a high narrative name settle into a longer digestion phase while people debate whether the valuation still has room?